Several prop firms have started removing gold from their list of tradable instruments, and most traders haven't been told why. If you trade gold on a prop firm account or you've been thinking about signing up for one, this directly affects your decision. This is not speculation. The CEO of a prop trading technology company recently went on a podcast and explained the economics behind it. And what he described doesn't just raise questions about one firm. It changes how I think about every challenge fee in the industry. This is exactly the kind of situation that confirms why I do not put my trading career in someone else's hands. By the end of this video, you'll know the one number that tells you whether a prop firm challenge is ever worth paying. This comes from 𝑀𝒊𝒎𝒔𝒕𝒂𝒎𝒑, the co-founder and CEO of Rhodium FX and former COO of Dominion Markets. He made this statement in an authentic podcast interview reported by the finance magnates on the 31st of March, 2026. Now, what makes this different from the usual speculation is that Vandenberg isn't guessing from the outside like the rest of us. He's describing what he's seeing other firms in the industry do, and he's explaining the economics from inside the prop firm world. Here's what happened. Gold prices pushed to successive all-time highs in early 2026, and trading volumes exploded. Easy Markets, a broker, reported a 240% jump in gold trading during the Q4 of 2025 alone. And that's not a small move. That's an entire market segment suddenly making money. Retail traders on prop firm accounts were riding it. Trend-following strategies were printing money because gold was doing what trends do. So what did some of these firms do? They removed gold from the list of tradable instruments. Not because of volatility concerns, not because of a regulatory requirement, because traders were winning and the economics couldn't absorb the payouts. Vandenberg described how firms are not even allowing gold to be traded anymore. If you are trading on a prop firm account or considering one, think about what that actually means. The instrument where your trading rules were working can be taken away without notice. You don't control what you trade. They do. And that's probably the part that should bother you the most. Here's what makes this different from a broker changing its terms. When a broker adjusts spreads or margin requirements, your account still exists and you can move to another broker and keep trading. But when a prop firm removes the instrument where you built your edge, your entire strategy inside that account is dead. You can't just switch markets overnight. The months you spent refining your goal setup, your entries, your position sizing for that specific volatility, all of it becomes worthless inside their system. That's not a terms update. That's a reset button someone else pressed on your trading career. And it gets worse. This confirms something I've said for years. Prop firm challenges sell hope. The reality is strict rules, pressure, and low pass rates. Now we can add another reality. Even when you beat the odds and start winning, they can change what you are allowed to trade. That's not a trading career. That's renting someone else's permission to trade. The gold ban exposed a trust violation. But what Vandenberg described next exposes something deeper about how a growing number of these firms actually make their money. His words about instant funding challenges were that they are just a quick money-making scheme and that they literally work on people's greed. That's not me saying it. That's a CEO who builds technology for this industry, describing what he sees other firms doing. The mechanism is simple. You pay a challenge fee and the firm keeps it whether you pass or fail. Most traders fail, so the fee revenue exceeds the payouts. That's the business. Vandenberg described firms whose owners make money real quick and then they pull a rug on the whole system. They collect fees, run for a few months, and vanish. According to his estimate, new prop firms are opening at a rate of 2 to 5 per week. because the entry cost of starting one is low and the fee revenue is immediate. And when you hear that, you start to realize it was never really about funding talented traders. The maths only works if most people lose. Think about that for a second. You are sitting there telling yourself, I'll be the one who passes. I'll be the exception. But the whole business model is built on you not being the exception. This is why I've always said that trading underfunded isn't brave. It guarantees failure. And prop firm challenge fees are the most expensive form of underfunded trading there is, because you are not just underfunded in your account. You are funding someone else's account with your money while they control every rule you trade under. So you've got firms banning profitable instruments and a business model built on extraction. But here's what happens when that model runs long enough. According to Finance Magnets tracking, out of 376 prop firms, 114 are no longer active or show signs of no operations. That's roughly 1 in 3, gone in under 2 years. This is not a slow decline. An estimated 80 to 100 firms shut down in 2024 alone. Funding Ticks announced its closure on 18th January 2026 after retroactively changing its rules in December of 2025. And traders who had followed every guideline, had hit their targets, were left scrambling for refunds. Here's what a rules-based trading system you own gives you that a prop firm never will: ownership. When I sit down for my trading session, nobody can remove a market from my watch list. Nobody can change my payout terms after I've already won. Nobody can shut down my account because I was too profitable. That's the difference between building on your own foundation and building on someone else's trapdoor. But here's the uncomfortable question. If you stepped away from prop firms tonight, would your own trading process survive on its own? Because if you don't know which part of your trading is actually causing the losses, funding your own account just means paying the same price to yourself instead. That's why I put together a free 3-minute diagnostic quiz that identifies the most common reason part-time traders keep losing money. And most of them have nothing to do with the markets. The link is in the description. But right now, there is one specific thing you can calculate tonight that changes how you think about every challenge fee you've ever paid or are considering paying. So the question isn't whether some prop firms have a conflict of interest. An industry CEO just described how it works. The question is what you do about it. Tonight, I want you to calculate your conflict tax. That's the total hidden cost of trading inside a system that profits when you fail. First, open your bank statements or payment history. If you've used prop firms before, add up every challenge fee, every reset fee, and every activation cost you've paid. If you haven't used one yet, but you've been considering it, write down the challenge fee you are about to pay. That's your conflict tax bill, either already paid or about to be. Now here's the part that changes how you see that number. Take your total and ask yourself how many real trades that money could have funded in your own account. Say you are risking 1% on an $1,000 account. That's $10 per trade. $300 in challenge fees, that's 30 trades. 30 real data points about whether your trading edge actually works. That was handed to someone else's system instead. And then make one decision. No more challenge fees until you have a proven trading edge. That means a profit factor above 1.4 over at least 30 demo trades. If you don't have that number yet, paying for a challenge is paying the conflict tax twice. Once for the fee and once for the losses that follow because the edge wasn't there. That's the difference between the trader who reads the headline and keeps paying and the trader who reads the headline and does the maths. Be the one who does the maths. You've just calculated your conflict tax, but knowing to stop paying, it is not the same as knowing when you are actually ready to fund yourself. Because without a clear threshold, the same impatience that made challenge fees feel like a shortcut will put you into funding too early. That's exactly what I break down in my video on how to know when you are ready to fund your own account. It gives you the exact formula for the minimum capital you need and the 2 conditions that must be true before you deposit a single dollar. Without that formula, you are guessing. So see you in that video.